Hello and welcome to another update video about DOT. We are here on the long-term chart for DOT, and we talked about that one before, but I think, while the market is slow, why not take a look at what the projections show, because we often get caught up in micro patterns, and it's worth being aware about, being aware of critical support levels and also upside targets when we talk about the bigger picture. On this chart, I've got two bullish scenarios here. I'm leaning towards the white one, which has a less bullish outlook, just because I have difficulties to see it really push to, let's say, the 1.618 extension around $285. Not in this bull market. I mean, it can happen. If that's the case, fine. I've got it on the chart here as a potential, but let's first see if the C wave can fill in anyway. And to be honest, I don't really care if it's the white count or the yellow count. Both point to the upside. And there's a clear level that tells me when these scenarios will become less likely, and that's a break below the 78.6 retracement of the rally to the upside that started in October or September, and that is the $4.60 level. So below $4.60, the bullish thesis will become far less likely. Phenomenal reward to risk ratio. I mean, this is now the moment of truth. From here, it needs to turn around, or it will most likely lead to new bear market lows and a continuation of the bear market. And what would be the count then? We can talk about that. But first of all, I think it's important to recognize that we have a strong rally into 2021, then a pullback, which is either a wave 2 or a B wave in an expanded flat, in which the C wave was quite long, but it just extended beyond the 1.618 extension a bit of the A wave. That's absolutely okay in a so-called expanded flat. And then from here, yeah, we could have started now a C wave to the upside or a third wave. One more reason for my preference of a C wave is that if I look at the long-term targets for what a C wave should do, $54, maybe 101, compared to a third wave, which should actually get to 150 at least. This initial wave 1 is far too small for the third, but it makes sense in the context of a C wave. So it's just sort of the details, it's all about that tendency to, really looking at different, Fibonacci levels, different ratios of different wave degrees and trying to find confluence. And by doing that, we get to the most probable scenario. But again, I won't rule out the yellow count. Let's first see if the $4.60 level is holding. But what happens below 460? I mean, at the moment, there is no confirmed low in place here. It actually looks a bit like a bearish flag, which would allow for one more low, maybe targeting 560 or 460. Well, below 460, we are going to test most likely the October lows around 355. But when we get there, it's most likely that this initial 1-2 setup will get invalidated. Well, we could say that possibly this fifth is still unfolding. Okay, that would be the bearish backup plan. Then we would have to deal with quite a substantial fourth wave, but it's not invalid. Not if we consider the move down a diagonal. Then the wave 4 was quite aggressive, yes, but we could, possibly even see this as a 1-2 then. That's possible, yeah. And then we have a 1-2, 3, strong 4, and the 5 to the downside, possibly into the low $2 region or something. But that's only the alternative right now, and ideally this doesn't happen, yeah. So that's sort of what I'm watching for at the moment on the DOT chart. In this case, by the way, we would be wave 4 here would be a flat, which is possible, entirely possible. Also because the move up is a diagonal, so it definitely leaves the door open for a more bearish scenario. But then again, we can keep it very simple. There's a $4.60 level, which is the line in the sand and distinguishes between bullish and bearish momentum. Looking at the short-term chart, there isn't much new stuff to say. I wish I had to tell you something new. The 5 waves up, you can see them here into the March highs. 3-wave pullback could be over, could get another low. $4.60 is the key support level. And if you're looking at this sideways consolidation here, it doesn't clearly indicate that a low is already in. So it rather looks a bit like a bearish pennant, which could allow for trend continuation to the downside. And then the next support is 560 to 540. There are some Fibonacci levels. As you can see, we need some kind of a breakout here. At the moment, it's just ranging like many other coins as well. And it takes minimally a break above this 23rd of April high. at around 760 to suggest that maybe the yellow count is unfolding, which shows how a 5-wave move up would look like, which would give us further confirmation that indeed wave 2 already bottomed, but it's not very clear yet. It's not very clear yet. So we have to be patient. I think one more low is very likely here. And then take a look at 560 next. But yeah, we keep the door open for higher as well. It's just that if we get a break below that last low at around $6.05, that would clearly invalidate the yellow scenario. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.